There's very low savings rates in the Philippines, and even those that save, a large proportion, in fact the majority, aren't saving through the banking system. So we have to create bank and non-bank models that allow for the poor segment of the population to participate financially. If you really look at the non-large city, non-urban center strategies of how do you get to the large islands and regional population of the Philippines, it's not going to be about building branches. So companies like Ant Financial are making the banks of China and their lending practices fundamentally unprofitable. And so those strategies will be digital, and they will be partnerships between the telecom service providers and the banks and the non-banks. They will be strategies where financial technology firms come in with new services and products, and they will either disrupt the large banks, or they will partner with them, or the banks will adopt their own digital strategies to get at this challenge. But fundamentally, it's a new ecosystem, and the ecosystem will have multiple players. The government and the regulator has to be kind of a convener, if not a conductor of the orchestra as this happens, in particular to protect the financial inclusion policies and objectives of the Philippines, and to protect the poor, and to ensure that these products and services are rolled out in an appropriate way. But also you have to let this innovation thrive, and the more it thrives, the faster it will be delivered to the poor.